Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
We're going to take a look ahead now into earnings trends for the new year, new calendar year, with our research director, Shiraz Mian, who is our go-to person here when it comes to these matters. So we still have to wrap up the old year because as we start the new year, we have the Q4 reporting season, right? And so before we get into talking about calendar 2016, let's talk about Q4. It's going to be upon us shortly here as the new year begins. Up to this point, we have seen 3 straight quarters of earnings declines for the S&P 500 index. So is Q4 going to provide us the 4th one?
Yes. We have had 2 back-to-back negative earnings growth last quarters, and this was going to be the 3rd one. I have a summary picture for Q4. As you could see, it's not looking pretty. 7% total earnings decline for the S&P 500 in Q4 on 5% lower revenue.
So we've had 2 declining
we have 2 back-to-back, that's right.
And this will be the 3rd. Okay.
This will be the 3rd one, yeah.
All right, my mistake.
There's some growth in finance in Q4. Strip finance out, and the growth picture becomes even uglier as the bottom row in that X finance shows 10% earnings decline on a year-over-year basis in Q4. So yes, we have another grim growth earnings season upon us.
All right, so 3 straight, just to clarify.
That's right.
So does this support that earnings recession talk that we started hearing about in Q3?
I think it does. A lot of it is, like they say with beauty, it's in the eye of the beholder. So I see that we've been in an earnings recession for a while. This just further confirms it. I have this chart to show, and here you could see that this will be the third quarter. The folks who do not see it as an earnings recession, they like to look at the number on an X energy basis. And granted, on an X energy basis, we have not had back-to-back negative. So earnings were barely in the positive column in Q3, barely in the positive column in the quarter prior to that. Though they will be negative in Q4 on an X energy basis as well. But overall, as we have been discussing here for quite some time, the earnings picture has been grim. There's no revenue growth. Margins have topped out. On top of that, you have the energy drag and the strong dollar. And you may call it whatever, but it's not a good earnings picture.
But you wrote recently, if you want to take a look at something that might be a little positive, for the 2nd quarter of calendar 2016, you see some growth coming.
Yes, the growth picture is improving, but that's more of a mathematical reality than
actual growth.
Then it's growth, but it's more of a mathematical reality than some re-acceleration in ground fundamentals. Like if you look at this chart, you will see that in Q3, growth is expected to be 5%. And one major reason for growth improving in the 2nd half of the year, even though folks always in the outer period, they're positive and optimistic. It's sunnier and nicer in the outer quarters than it is right in front of you. But a major reason for that is that the energy sector drag gets anniversaried. I'm not sure if anniversaried is a proper word or not, but we will have less of a drag from the energy sector. And just to make that point, this shows you how bad the picture has been in the energy space. They have really been down 50, 60% declines last few quarters. That's the trend in Q4 as well. We have something similar in the 1st half of the year, but once you get to the second half, then the comparisons are not that bad. So you remove the energy drag, the rest of the S&P 500 starts looking relatively better. On top of that, folks are expecting finance to be doing better, expect the consumer sectors to be doing better. Some of these gasoline savings and the better job labor markets are expected to give us better retail, better discretionary, better staples. Technology is expected to do a little better too. So yeah, there is some real growth, but a lot of the headline positivity is coming from less energy drag.
Still, though, your expectations, from what I'm hearing, remain subdued.
They are. And there's some of the factors we mentioned. Top line growth has been non-existent. It's been negative the last few quarters. It's expected to remain negative in the near term too. Margins have topped out effectively. So if you can't grow the top lines and you can't expand margins, there's no way you're going to get the bottom line growth. There's been EPS growth from this incredible share buybacks that companies have been doing, but even that activity will slow down as the Fed starts and accelerates the tightening process.
And a strong dollar is still going to keep a lid on any growth?
Yeah, the hope is that the bulk of the strength in the dollar is behind us, that the Fed tightening will keep the dollar strong, but we will not see the acceleration that we saw in 15. That's just a hope. We don't know. Maybe we see an acceleration in dollar, but if the initial hope of it just being stable and strong and not really trending up comes into realization, then that helps the second half 16 outlook as well, because you have easier comparisons then.
So you mentioned sectors before. Is finance going to be the safe haven sector?
Finance potentially could be, because finance has not had revenue growth and finance has been running on cost cuts the last few years. So it's been cut to the bone. Any improvement on the top line will be a big boost to the bottom line for the sector. That's what the hope is, that as the Fed keeps raising rates, that improves their margin picture, and that basically filters down to the bottom line.
All right, we'll be checking back with you in the weeks ahead to see how this all shapes up.
Sure.
In the meantime, you can always check on what Shiraz is thinking as far as the markets, as far as earnings, as far as a lot of the dynamics out there in his Ahead of Wall Street column that appears on Zacks.com. He writes that daily, and it's a good read, something good to check into before you start your market day. With Shiraz, I'm Terry Ruffalo.